not having you in the room throughout the day anymore. I know, bro. You missed like almost all of the trades today. Did you take anything, David? I'm assuming not. I know, David. It's all right, cool. So we got the YouTube going. Let me just post this on the K2 Facebook real quick, and then we can probably get started. Turn that off. Yeah, David, you have a 1 week on, 1 week off though, right? Or I mean, 1 week on and then 1 week remotely. Oh, I just remember the new week just started. That's why you're not at home. I forgot last week you were at home. Let's see, share now. All right, cool. So I got this on the YouTube and on the Facebook. So now I'm going to I'm just gonna finish up these alerts and then we can get started. Stuck in hell this week. And I can only imagine, David. Can't imagine going back to a job. Let's see, 23. TP1 plus 23. Let's see what else we got here. TP2. All right, cool. Looks like people are still coming in the room. So if you guys have any questions, feel free to put them in the Q&A. I'm gonna start looking for trades at 6 p.m. That's when the 4-hour candle closes my time. So once we get to that point, I'll stop answering questions and I'll stop analyzing, and then I'll just look over any available trades for the next 4-hour candle. Otherwise, I'm probably just gonna go over some strategies that people wanted me to go over today, and then the trades that I called today, because I know there's a lot of new people here, so a lot of new people aren't familiar with the K2 strategies. So I'll be free to go over those for a lot of the new people that are interested in signing up to the strategy subscription, so you guys can have access to all the K2 indicators and all of the K2 strategies. All right, cool. So I set up all my alerts right here. That's pretty much how I set my alerts up, guys. So, whenever I call a trade, like right here, I call it GU. I have target 1, target 2, target 3. Pretty much what I do is I set alerts at each of these targets so that once price reaches that point, so once price reaches TP1 right here, I'm going to move my stop loss to TP1 right here so I can guarantee those profits and eliminate all risk. So at that point, it's risk-free and everything moving forward is straight profit. Same situation once price reaches TP2 up here. Once price gets to this point, I'll move my stop loss up there. And then lastly, if we hit full TP, then we hit full TP. In some situations, I'll remove my TP and I'll just trail the stop. If I can follow the trade. Otherwise, I'll just take full TP, and that's cool because I know that there's going to be, more trades to come. See, David said, "Can I have the 40K in a day strat?" Now let's get that. Yeah, no, I think I don't think Tigo's here. So Tigo was all he did was take the US 30 calls, bro. Like he took the US 30 calls and he just let them run. Like he didn't move stop loss. I mean, that's super risky, but he trusted me and he trusted K2, so he just took the trades and let them run a full profit. But he made a ton of profit today. I'm pretty sure a lot of you guys in the let's respond to this. Yeah, a lot of you guys in the premium saw his results for, I don't know if that was just today. Let's see, on the 3rd. So yesterday and today, but literally he was just taking the US 30 trades and letting them run. He's taking a couple on his own, but for the most part, there were just these US 30 trades that were hitting. And if you guys are familiar with, the US 30 strategy, they've been hitting like literally almost every call. Like, I was like 750 pips, CP1 for 375. I think he was running twin position. So he was running position per TP, which is kind of risky. But since our TPs were hitting, he was just hitting everything. Like literally they're all hitting full TP, 1500 pips. And, you do that about, 3 or 6 times this week and you're going to make a ton of profit. So yeah, David, I mean, pretty much for the most part, that's all he really took. I wish I took them. I didn't even take all the trades because of the way that the market was moving. But I mean, it's all good. It looks like the market is swinging back to its normal self, because we've been hitting TPs like back to back. Like if we look at the results from last week, let's see. So if we look at the results from last week, we had like so many wins here. We had 10 FX wins. That's like unheard of in like 1 week and one loss. Generally they're kind of split up, but every day, like Sunday we had 2 TPs, Monday we had 2 TPs, 1 stop loss, which is given. Tuesday 4 TPs, Wednesday 2 TPs, Thursday 3 TPs right there. So it looks like the market's actually, it's getting back to how it used to move before summer. I'm sure you guys are aware, how the market moves in seasons. Generally in the summer, the market moves slow. So it's kind of hard to catch good entries. But overall, we've been doing pretty good so far. So it's been looking good. So Randall's asking, Randall Hannah's asking, my question is, how do you mark up your charts? New here. So Randall, I'll show you a brand new chart. So let me just, I'm just gonna load my testing chart. And I'll just show you an example. So this is a markup from earlier today. I was going over with one of the K2 premium members, Mike. I don't know if Mike's here. Yeah, Mike's not here, but I went over this with Mike today. He was asking me, how to apply the K2 pivot strategy. So I broke it down for him on the 4-hour chart, because he plans on trading on the 4-hour. But if you guys are familiar with the strategies, they work the same all around. So I'll just show you an example for AudioSD right here. So I'll just delete this. And then I'll take off, pretty much all the indicators. So basically, depending on what strategy that I'm applying, first thing I'm going to do is I'm going to mark up the zones. So pretty much the zones are areas where price is likely to reject from. And the way that I do that is I will turn on the K2sr indicator, the version 2, which plots the zones on the chart for you. So as you can see right here, price moves from zone to zone. So I'll draw the zones from over here, and then I'll take them off the chart so you can see what I mean. So basically, I'll draw like a zone where the K2sr is lined up price. Generally, the way that I like to draw up the zones is I like to draw them up in 20 pip increments. So if they're like within 20 pips from each other, I'll just connect them. So from down here to up here, they're about 30 pips. So that gives enough space right there for, for you to get some pips before, price is likely to reject from it. But I'll mark this up right here. I'll mark this up right here. And there's different ways to do it. You don't have to mark it up exactly how I do, but this is just the way that I do it, so that I can see where price is likely to reject from. Like if I wanted to enter a trade up here, and if there's nothing above it, which will happen sometimes if it makes a new move to a new level, I'll just go on the higher time frames, like the 8-hour. If there's nothing there, I'll go to the daily. Nothing there, I'll go to the weekly. And then you can see right there, new zones have been created. So since we didn't have any zones in the lower time frames, I'll just create a zone right here, since that's where the next zone is. And then I'll go back to the 4-hour where I'm trading. So as you can see right here, I have all these zones already lined up. So I'll just take off the K2sr indicator. And then as you can see here, you can see that price pretty much moves from zone to zone. So price came down right here, rejected off this zone, came up, rejected off this zone, pretty much bounced from zone to zone, from up here to down here, up here to down here, up here, consolidated a little bit before it tried to break above. It just stayed within this consolidation. Then it shot up here, rejected off here, came down here, rejection, came up here, rejection, came down. And the K2sr pretty much plots all these zones for you. So you don't have to go and do any guesswork. You know exactly where the zones have rejected from in the past. And if you guys are familiar with the indicators, you'll know that the K2sr indicator automatically plots new zones for you. So if you replay back over here, this markup from earlier. So you can see right here that there's zones already plotted from previously. And then if you move forward, you can see that new zones are being created as price moves along. And, if you have this indicator, this kind of gives you like a little cheat code, because you know exactly where price is rejecting from. So obviously, if you're taking a buy here, you're not going to enter a buy when you're way up here, because price would reject off the zone. Same with right here. You wouldn't enter a sell right here because price would reject off this zone, and then price is going to go the opposite direction. And as you can see there, price just goes and creates new zones as price moves along. And this is just one indicator. So, this is the first way that I start looking for trades. So this is how I mark up this area right here. And then I take off the K2sr, and then I'll add other indicators depending on, what strategy that I'm applying. So if I'm applying the pivot strategy, I'll turn on the pivots indicator. And then just looking at the pivots indicator, basically if price is above the pivots and the pivots are angling in the same direction and they're spread out like they are right here, it's clear that price is trending upwards. So obviously you would only take buys right here. Or over here it's in consolidation. I don't really like to trade when price is consolidating. All the K2 strategies are based on momentum. Well, they're trend continuation strategies, but the entries are based on momentum. So first and foremost, you want to know what direction trend is moving. So if trend's moving up, you're only going to take buys. If price is consolidating, you generally don't want to trade, in a consolidating market unless you're applying a different strategy. So right here, price is trending upwards. And in this situation, I'd probably wait for a buy signal. And if you're wondering, because let me see, Randall's new here. So Randall, you're probably wondering, when would we enter a trade? That's when you use the K2 momentum indicator. So you turn that on right here, the K2TS indicator. And then, voila, there you go. You can see exactly like where price is moving. So right here, we have a buy signal. So this is going to indicate that momentum swinging upwards. So the main strategy that I've been using for the signals is the K2 zone trading strategy. And pretty much the way that that works is, here, I'll just put the requirements right here. K2 zone trading strategy. So first requirement, you're going to identify direction of momentum, which you'll use the K2 momentum indicator. Next, you want to identify a break and close of price from a K2sr zone. Lastly, you'll just enter on the open of the following candle. And that's pretty much it. I mean, for the stop loss, this is going to be subjective, so I'll explain how I do the stop loss after. But yeah, pretty much. So first, you're going to identify the direction of momentum. The way to determine that is you want to make sure that that you have a valid K2 signal. So right here, this is a valid buy signal, and this is valid because it's a buy signal, a green buy signal with a green bullish candle. So if it's green and green, then obviously momentum is going to swing upwards. This would be a false signal. This is a sell signal with a green bullish candle. So in order for it to be valid, it would have to be something like this. So it would have to be a red sell signal with a red bearish candle. So pretty much right here, this would be a valid sell signal. I wouldn't take it because it's against the trend. But right here, this would be a valid buy signal. So as you can see right there, and it's going with the trend because price is above pivots. And it's a nice move for about 140 pips. Again, right here, a valid buy signal. Another 100 pips. Right here, another buy signal. Huge move for like 400 pips. And that's one of the strategies that you can apply if you have access to the K2 strategies. But yeah, going back to this strategy right here, pretty much you'd identify the direction of momentum. By doing that, you're going to look at the K2 momentum indicator. So right here, we have so I'll just take off the pivots because this isn't the strategy. We're not using this for that. Basically right here, you want to identify the direction of momentum. Right here, we have a valid buy signal. And then it's a valid buy signal because it's a green buy signal with a green bullish candle. Next, you want to identify a break and close of price from a K2sr zone. So as you can see right here, price was below the zone. Price broke above it, and then it closed right there. So this would be a confirmation of the second requirement. First we identify the direction of momentum because we have a buy signal right here, and it's a valid buy signal. Second, we identified a break and close of price from the K2sr zone. So those first two requirements have been met right here. Lastly, you just want to enter on the open of the falling candle. So once this closes, you can enter a buy position right here. And generally, I'd want to put my stop loss at the previous swing right here, about 98 pips or 97 pips, I guess. And then the TP 1-to-1 risk reward ratio away. So right there, if you took this trade, you would have hit full TP right there. But like I mentioned earlier, setting your stop loss is going to be, it's going to be subjective. So you can, like, this might be, swing to me. It might not be like where you want to put yours. Sorry, I'm going to take a break. We just hit TP for Euro USD, TP2 for 38 pips. So I'm going to post those results real quick. Man, we've been on fire this week and last week. All right, so this is pretty much how I post the results. I have alerts for every TP. So when you do hit TP, I'll just post them up. Okay, so right here, that was at 38 pips. TP2. Man, I don't like Aaron's posts. Whenever Aaron posts, I always post them in bold. I don't know why he does that. So right here we have, change that to Euro USD. TP2 for, I think it was 38 pips. Yeah, Aaron's not on the call today. He's doing some stuff, so it's just me tonight. So let's see, post that there. So there we go. We hit TP2. If you took that with the standard lot, it's $380. Take that with a mini lot, it's 38 bucks. If you took that with a micro lot, that'd be $3.80, which, profit is profit. So I'll just show that there. Show that there. And I'm just doing this because I forget, guys. So like sometimes I forget to put TPs, and then if we post a TP later, people are gonna ask, like, when did that happen? And I'm like, well, it happened earlier, but I was in the webinar, so I just need to post that so that it can be posted. But yeah, back to the strategy. So there's an entry right there. And then, so that's just an example. So I was going to show you an example of when I would take that again. So right here, pretty much using the same strategy, but I'll show you like a quick rundown too. So right here, we have another one. So if you took this entry right here, it's another valid entry. Put your stop loss at the previous swing down here for about 26 pips. Yeah, 126. And then you can see right here that it hit TP. It took a long time, but it hit TP way down here. So that hit TP again right here. So this would be an entry right here, but I would put the stop loss in line with the zone, because obviously, like I mentioned before, generally price will go from zone to zone. So price came from here, rejected off this zone, rejected off this zone, rejected off this zone. And that's pretty much how price moves. Like if you guys look at the charts and you use you actually practice analyzing how price moves, it literally moves from zone to zone. So right here, I wouldn't have taken the sell. I wouldn't have taken this sell either because it's so close to the zone. Even though it's a valid entry, you could have locked in some profits right here, like 20 pips or whatnot. But it's just too risky. I wouldn't take that. It's, because you have to cover the spread, and it's just a hassle. Like right here we'd take this buy because there's a huge space here. You could lock in 60 pips before it reaches the next zone. So if you took that, locked in 80 pips right there, another entry right here, another 80 pips, and so on. So pretty much following this strategy right here, I would make another entry right here. So once price breaks above this zone right here, because first of all, we're going to identify the direction of momentum. Right here, we have a valid buy signal. So, obviously we're only going to be taking buy entries from this point. And next, you want to identify a break and close of price from a K2sr zone. So like I mentioned earlier, these are the K2sr zones. Basically, once price breaks above it or breaks below it, that would be considered a break and close from a K2sr zone. So pretty much right here, once this breaks above here, then we could enter a buy right there. And right here, there's no nearby resistance zone, or an upper zone where it could bounce off of. So the thing is, it'll probably shoot right to TP. So I'm gonna keep an eye on this. I'm actually gonna mark this on my chart, just so just in case we want to take that later. But yeah, Randall, that's pretty much how I mark up my charts. The most important thing is going to be the zones. So if you look at my charts over here, so I'll go back to these are my official charts. These are the charts that I trade on. If you look at every pair that I have, I already have the zones already marked up. So this is how I mark up my chart. And then depending on, you know, what strategy I'm applying, I could apply the pivot strategy. I can just toss on the pivots, or I can just trade the zone strategy that I just went over. You know, there's a ton of strategies that you can apply. If you want to apply the intraday strategy, I turn on the trend meter down here. If it's green and green, you take a buy right there. And there's 85 pips. I mean, there's a ton of strategies that you can apply. But generally, all the K2 strategies are very similar because they're all based on trend continuation. And so they're based on trend continuation, and the entries are based on momentum. So pretty much these vertical lines, these are going to be the catalyst for every single entry that we make. And they're all kind of similar. So, you know, like I mentioned earlier, the intraday strategy, this is green and green right here. We could have taken a buy right there for, you know, one of 85 pips. If we're applying the zone trading strategy, again, right here. So price was going up, price broke the zone right here. We had a valid momentum swing upwards. So we would have taken a buy right there. Same exact entry if we were applying the intraday strategy, same thing, another 85 pips. If we're applying the pivot strategy, same situation right here. Pivot strategy, price comes up, retrace, rejection, buy signal. It's the same exact entry for, you know, 3-4 different strategies, same thing. So, you know, just depending on what strategy you want to apply, this is how I mark up my charts. So if you look at all of my pairs over here, so this is, I'll just take everything off. So there's odd cat, I marked up the zones already. Odd CHF, the zones are marked up. I'm literally ready to go. So, you know, whenever I'm ready to take a trade, all my charts are marked up already. So literally, I already know where price is going to reject from. All I need to do is apply the specific K2 strategy that I want to apply. See everything right here. EC, EG, EJ, EN, EU. Like I literally have everything over here. So I'm ready to take trades whenever. Here's our GU trade from earlier. It's about to hit TP. And we're on a hot streak this past 2 weeks. This is the NC from earlier. Mine hasn't filled yet. So you can see right here, we call this trade right here, but price came up, it just shot up and it never came back down. I know a lot of people that are trading on IC markets, you know, theirs got filled, and I'm sure that was due to spread. You know, unfortunately, each broker works differently. So, you know, I trade on Forex.com and I trade on a DMA account, which is a direct market access account, or I think they call it a SDP account now, where I have like really tight spreads. I have like literally 0 spread sometimes. So for something like this, I wouldn't have, well, I never got filled because I still have my alert right here. You can see this NZDCHF filled. If price ever reached that point, it would have filled me, but it hasn't filled me yet. So, you know, some people are still in this trade, but it's fine because it looks, so if I turn on the pivots, it's still in the heavy trend downwards. So, you know, basically what I see happening here is it's probably going to reject off the zone and come down, or reject off the pivot or this pivot or anywhere up here. I don't think it's going to shoot up too far. So I'm not too worried about this trade. If you guys are still in it, I think you guys are fine. Just, you know, give it some time because NC does move a little slow. So that's fine. We keep going down, NJ. But yeah, you know, this is just a basic breakdown of how I mark my charts. There's our UCAD from earlier. That was really nice. This hit full TP pretty quick. 65 pips earlier. Our UJ is about to hit TP1 right here for 18 pips. I don't really trade the US dollar versus the Singapore dollar anymore. I still have it here, but I don't trade it. So here's our UC from earlier. It hit TP1, you know, a while back. I think it was like 20 something pips, about to hit TP2 right here for 42 pips. So we're on a pretty hot streak, guys. So if you guys are applying the K2 strategies, everyone is pretty deep in profit, you know, this entire month, past 2 weeks. And it's looking good. Here's gold and silver. I don't really trade these anymore, but I just have them there for, you know, when people want to ask questions about them. And then the indexes here. I have all these indexes here too as well because people like to ask about them, but I personally don't trade anything aside from US 30. I just trade US 30. You know, I just figured, well, like me personally, I figured that, you know, if you can master the best indice, there's no point in you trading any other ones because this one's the most volatile. And if you're able to master this, then there's really no point in you trading the smaller indices, because they all move in the same direction. It's like, okay, if you guess US 30, the direction S&P is going as well, or what's kind of similar to like the DAX. It's pretty much the same thing. So I don't trade these, so I'm not even familiar. I just have these marked up from the last time people asked. But I personally don't know how to trade these because I don't know their movement. Because you can see here, S&P will move about, I don't know if it's 40 pips or 400 pips, but if you look at US 30, it'll move like 3,000 pips. So I don't know the difference between the breakdown. So if you guys ever ask me, for parameters for S&P or at NASDAQ or anything else, generally I can't really give you a straight answer because I don't trade them. So I'm not going to give you guys, advice on something that I don't trade. But yeah, oil, cryptos, I don't trade cryptos at all, but I just have them here just in case. So yeah, let me see. James said gold took off after breaking its zone today. So let's go to gold real quick. Yeah, man, gold's been like shooting up like crazy, dude. Like, so yeah, this was the zone he was talking about right here. Or I don't know if it's the same one that James is talking about, but I'm assuming that that'd be it. So if we do that, we turn on the momentum indicator. Yeah, it's a huge jump. Jeez. I wish I took that, but I don't really trade gold anymore. Once I got really good at US 30, I kind of figured I might as well just focus on that. That and normal Forex, because you only really need one highly volatile pair to trade all the time. And then Forex, to basically mitigate your wins or losses. So measuring this right here, if you take this buy signal, geez, look at that. I think this is like 600 pips. You don't count the last number. That's where the decimal goes. But yeah, geez, if you took that trade on the 29th, so that's not even a week ago. It's like less than a week ago. You could have locked in a ton of pips. And a lot of people got screwed right here with this one. I think a lot of people were applying the pivot strategy for this one. So yeah, if you guys are familiar with the pivot strategy, basically you identify the trends trending upwards. You wait for a retracement, rejection off the K2 pivots, then you take the next buy signal. Right here, if you took that buy signal, geez, 400 pips, 480 pips. It's a huge move. James said the 10-minute. Hey, Jalen, I see your question right there. Hey, Jalen, can you put that in the Q&A? Because we have a list of questions right here. So if you can put the, put any of your questions in the Q&A, I'll get through to your questions, but I'm just gonna, I'm just gonna go over this real quick, and I'm gonna keep going down the Q&As. So let's see. So yeah, James said gold on the 10-minute. And then we got the SR right here. I don't have the SR on mine, but I think he meant the rejection of the pivot. So if you were scalping it and catching the rejections off the pivots, wow, yeah, that's a huge move. So right here, I'll just go over the strategy really quick because it's not very difficult. So the K2 pivot strategy, and this works on all time frames. All the strategies work on all time frames, but this one specifically is really good for scalping. So first, identify trend, K2 pivots. Next, identify retracement. 3, identify rejection of K2 pivot area, zone area. And lastly, identify valid K2 signal. And then yeah, same requirement with all the other strategies. Enter on open of falling candle. So this strategy is really simple. Like all the K2 strategies are extremely simple. You just have to know how to follow rules and do things properly. So first, you're gonna identify the trend. In order to do that, you're gonna use the K2 pivots. If price is above the K2 pivots, all 4 pivots, and then the pivots are angling upwards and they're spread out like they are right here, clearly it's in a strong uptrend right here. So an example of it trending down is, see, I don't think it was trending down for a while. So again, right here, the pivots are spread out, price is above, it's trending up. Okay, and then right here, price was below the pivots were angling down and they're spread out. It's trending down. So, you know, it's pretty obvious when price is trending down, price is trending up, price is consolidating, price is trending up. Okay, so first requirement, identify the trend using the K2 pivots. Right here, price is trending up, first requirement's met. Next, you want to identify a retracement. In order to do that, you're going to look at the price and you're going to make sure, you're going to see when price establishes a high. So you can see right here, price established a high, retrace down. So this is a retracement. Again, right here, price shot up, price came back down right here. This is a retracement right here. So there's the second requirement. You identified a retracement. And one way to do that, if you guys aren't familiar, is you'll just see when price shoots up, it establishes a high like it did right here, and then it came down. That's a retracement. Again, right here, price came up. So this might be a smaller retracement, but it's not really that strong because it just went sideways and didn't come back down. But right here, price came up, established a high right here, and then it came down. So that's a retracement right there. Requirement number 2 is met. Third requirement, identify a rejection off the K2 pivot zone area. So the K2 pivot zone area is going to be anywhere within the pivots. Generally, you want to avoid trades when they close below the pivot because that can indicate a reversal coming. So right here, price came down, retracement right here, and then you look for a rejection off the pivot area. So it doesn't have to reject directly off one of the pivots. It just needs to reject off this area. So as you can see right here, price came up, retraced right here, rejected down here, established a low, and then came back up. Lastly, you want to identify a valid K2 signal. So right here, we have a valid buy signal, like I mentioned earlier. In order for it to be valid, it's got to match the color. So if it's a buy signal, it's got to be a green bullish candle. If it's a red sell signal, it has to be a red bearish candle. So this is invalid. This would be valid right here. So right here, all 4 requirements are met. We identify the trend, it's trending up. We identified a retracement, it retraced right here. Identified a rejection, it rejected right here. Identify a valid K2 signal right here. We have a valid buy signal. Next, enter on the open of the following candle. So right here, we enter a buy position. And then this is a move for about, 87 pips for gold. You hit go, and there you go. Easy as that, guys. You would have hit profit target in like 30 minutes. And then if you put no TP, I mean, you literally could have rode this all the way up. Yeah, easy as that. And then there's another entry right here too. So if you guys were taking that same strategy, you could have entered right here. But it looks like it's a little overextended. So I don't know if I'd enter this right now because, you know, once price moves like this, like super heavily, it's about due for a retracement or like a heavy retracement. So what's going to happen here is price might come down, test this pivot. It might even test this pivot or even this pivot. So, you know, after it's moved this much, I wouldn't enter right away because, you know, generally price is going to have to retrace at some point. So looking over here, I mean, this is a clear example. So right here, price shot up pretty nice, and it came down super heavy right here before correcting back up. Same situation right here. Price came up super heavy. So it's about due for a retracement. It might come down before it corrects back up. So that's why I wouldn't take gold right now. I think Amrit asked this. Let me check Amrit. Yeah, Amrit said, can you please check gold and Euro NZD? So, I mean, this is gold on the shorter time frame. I'll check on the higher time frame, Amrit, because I don't know how you're trading it. But you know, same situation here. Price is still pushing up super heavily. So the K2sr level is right there. I'm going to see where the level is on the higher time frame. So there's no level up there. It's gold's pushed to a high where it hasn't reached, like it hasn't reached this level in a long time or ever. I don't know. Let's see. It doesn't look like it's reached that level. Yeah. So look, Amit. So price is in an area where it's never been before. So there's going to be no zones, obviously, because it's never tested that point. You know, here in 1998, gold was way down here, came up, came down, came up. So there's literally no area where you can gauge where it's going to stop moving. So me personally, I wouldn't trade gold right now because it's so uncertain as to how far it's going to go or how far it's going to drop. It's pushed up so high that it's seriously due for a drop soon. So if it does drop, it's going to drop to, you know, one of the pivots, or even down here to the previous support that it's tested. So yeah, I wouldn't take that trade. Well, I wouldn't take this trade right now because it's just super uncertain. There's no there's really there's no ceiling. So the thing is, see, if we had a zone up here, then we could keep buying until you get to the zone. But the thing is, there's no zone that's been created. So if you go back, like I mentioned earlier, so you go back by the monthly chart, the last area that it's tested was right here, and it's below the current zone. So the current zone is right here. There's literally no point for you to gauge where price is going to retrace from and where it's going to bounce from. And you know how I trade. I trade safe. Like I only trade stuff that I know. Like I have a good idea where it's moving. The thing with gold is nobody has an idea where it's moving because it could literally keep skyrocketing, or it could come crashing down super heavy. So me personally, I wouldn't trade gold right now, you know, unless you're gambling. And Amron, I know you like to gamble, bro. So I'd be careful if you know, you're in this trade or if you're thinking about buying, because this is just too risky. You know, maybe talk to Aaron about it, because I know Aaron still trades gold. I don't trade gold anymore after I started trading US 30. So let me see if I go on the lower time frame. James, the consolidation of gold 10 minutes between two zones broke above. CT said the best thing to gauge gold right now is the lower zones on the dollar. Let's see. So the dollar, if you guys aren't familiar with the dollar index, it's DXY. Let's use this one. Yeah, so it looks like the dollar is gaining, you know, slowly gaining in strength. No, not really, but, you know, to some extent. So if that happens, if the dollar gains in strength, it's probably going to come down a little bit, to say the least. But who knows? Like, there's no way to really gauge when, you know, how long it's going to drop for, or because the dollar has been weak. I think the dollar is like the weakest it's been in like 2 years. So if the dollar goes down, gold goes up. You know, if fundamentals are falling properly. But that hasn't always been the case. So I wouldn't base it directly off that. But, you know, just looking at it from my perspective, or yeah, looking at it from right here on the 4-hour, the dollar is still pretty weak. So we could probably expect gold to continue on higher, but it's just too risky of a trade to take right now, Emirates. So I personally wouldn't risk it unless you don't care and you want to take the risk. I mean, and yeah, by all means, go ahead and take it. But it's just too risky for me personally. So let me delete the dollar index off here. The next question from Amarit, he wanted me to look at Euro NZD. So let's go to Euro NZD real quick. It's 518. Okay, so I'm gonna look at the charts in about 30 minutes, and then I can look for any entries. And if I see anything, then, you know, we'll take it. Otherwise, I'll just keep going through the questions. All right, so Euro NZD. Euro NZD is in a place that I wouldn't really trade it, Amarit, because price is trending up pretty heavy, but it's just rejected off the K2sr zone. So, you know, like I mentioned before, price generally moves from zone to zone. So price came from here, this zone, came down to this zone, came up to this zone, came down to this zone, and then it shot from here. It will consolidate a little bit before shooting all the way up here. So the reason I wouldn't want to trade Euro NZD right now is because it rejected off this upper K2sr zone. So the problem with this is that, you know, like I mentioned before, price moves from zone to zone. So odds are it's probably going to come down, but we won't really be sure how far it comes down. So it might come down to, you know, this pivot, might come down to this pivot, it might come down to this zone. There's a lot of uncertainty there before it shoots back up, if it's going to correct. But the thing with this is, I personally, I would take this as a buy bias. So pretty much I would take this trade if price was to come up and break above this zone right here. so that we can take a buy and ride it higher. Because generally the way I trade off trend continuation and I base all my entries off momentum. So if you took this entry right here, you take a buy. This would be a pivot entry right here. So pretty much price came up, like I mentioned earlier, retracement, rejection off the zone, K2 signal right there, a valid one, enter a buy, and you could have locked in like 140 pips right there. But then it hit this top right here. So it hit this top, and then it might come back. Like there isn't really a specified area where it would correct from. So it might come down here, and then it might shoot up, or it might come down here before it shoots up, or it might come down here. I mean, there's a lot of points where it'll come down from, but it could go either way. It could either come down or it could just continue upwards. Generally I like to trade when I have an edge. So obviously I have a buy bias here because momentum is swinging upwards, plus the trend is up pretty heavy. So if we did get a sell signal right here, I wouldn't take it because the trend up is so strong. And the last thing you want to do is take a sell. Like say if you entered a sell somewhere around here because you're anticipating price to test this next zone right here. The worst thing that could happen here is if you enter a sell somewhere around there, price comes down and then shoots back up, hit your stop loss. So that's why I would just wait for a valid buy entry instead of trading in both directions. Looking at the trend meter down here, it's also green on the intraday setting. So I have it set to the 30-minute, 1 hour, 2 hour, and 4 hour. So if you guys are familiar with the trend meter down here, it turns green if the price is trending up on the intraday settings, or it turns red if price is trending down. So instead of drawing trend lines or using the pivots, you can just look at the trend meter down here, and then you can see exactly the direction of price. So yeah, Amrit, I wouldn't take Euro NZD right now either because, like I mentioned, price did reject off this point, but I still have a buy bias, so I wouldn't want to take a sell against the direction of trend. I would wait for price to, let's see, so if it closed above here, and if you wanted to scalp it, you could wait for price to close above here. So here's an example. Price came up right here and then it closed right here, right? So you could have entered a buy within the zone and then rode it to the top right here. So like this little area to scalp it. Same situation right here. Price close above here. If we get a green candle that closes within the zone, odds are price is probably going to push up, test this zone right here before either rejecting or continuing upwards. So with this right here, if price closes within the zone, you have about a 30 pip leeway. So if you want to scalp this, you can catch, a 10, 15 pip move within this zone before, it retraces or pulls back or whatever. But just right now, there's no edge in the market for this specific pair. So me personally, I wouldn't take this trade. There's just nothing worth taking right now. Let's see. So I'm gonna look at CT's chart. He said the weekly dollar. Yeah, so this is DXY. This is the dollar index. Geez, it's coming down pretty heavy. So it looks like it's coming down. I don't know. It looks like a green line right there. So that might be a support actually. So like CT was saying, if it rejects off this point, then gold could be going the other direction. But the dollar affects like pretty much all pairs. So yeah, back to Euro NZD. I'd probably just hold off on this for now. Maybe check in with me and Aaron in a bit. But like I mentioned, I would take this trade only as a buy because I don't want to go against this trend. This trend is way too strong. All right, so let's see. Yeah, CT said, yeah, not worth the risk. It's just too risky. So let's see. We have, let's see. All right, guys, give me 1 second. I'm about to go do something real quick. I'll be 1 second. All right, guys, I'm back. Let's see. So next question is from Angel. I think Angel asked another question down here. So Angel said, what time frame should we mark up the charts? Me personally, I like to chart on the 4-hour because the 4-hour gives you a good picture of the intraday, the intraday areas where price rejects from. So the thing is, you can chart on any time frame you want. It just depends on how you're trading. So if you're trading intraday, like me, then the 4-hour and the 1-hour are probably best for you, just for setting up your zones. Because the thing is, if you chart, so let me go to the clean charts over here. So the thing is, if you chart on a shorter time frame, which you can, I mean, there's no problem with that. You just get a lot of noise. So let me just delete all this stuff right here real quick. I'm gonna turn off the momentum indicators. But yeah, so just looking at this here, you can see that the market structure is pretty clean. You can see exactly where price rejects from. But if you go on the so say if you go on the lower time frames, like the 1-hour, it's still pretty decent because I have it marked up on the 4-hour. But look, if I take this stuff off and then I add the SRs, it looks all right, but it seems a little less accurate. Depending on where the rejections are, because you can see price comes up right here, it rejects, comes down, comes up, rejects off this point. While it's still accurate, it's not as accurate as the 4-hour. So if I take that off, and then you look at it from the 4-hour, it's super clear, and then you get a bigger picture because you can see where price rejected from way back. So you can see obviously this is a zone right here where it pretty much consolidated from. Same situation right here. But if you go on the lower, so the 1-hour and the 4-hour are okay, but this was what I was mentioning earlier. So if you go on the say like the 15-minute, and then I take this off, and then you add the SRs, see, it gets a little messy here. Like, it still works, but it just depends on how you want to trade. You can see that a lot of the zones overlap. So right here it's clean, but once you get to this point right here, they start to overlap a lot. So it's kind of hard for you to determine the areas where they're actually clean rejections versus if it's just noise. Because obviously if you trade on the lower time frames, there's going to be a lot of noise. You go on the 5-minute, there's some noise right there. 10-minute, there's some noise right there. I mean, it's still clear. You can trade it, but just depending on how you want to trade. If you're going to trade this, your moves are going to be a lot smaller. So if I turn on the, see, like right here, you had a buy signal. You could roll this to this zone right here. It's only about 6 pips. It's not really worth your time to trade this strategy on the 10-minute. But if you're trading the pivot strategy, obviously it'll work a lot better here. So if you turn on the SRs, you can see here that you can catch more pips. Like right here, like 23 pip or 20 pips. Again, right here, another 20 pips. It just really depends on your trading style. I used to scalp a lot. Scalping used to be my favorite thing to do. But I don't like being on the charts all day anymore. So I trade on the 4-hour. So I do all of my markups on the 4-hour because that's the chart that I trade on. But obviously if you're going to trade on the lower time frames, you can do the same exact thing I did, but on the shorter time frame. So let me just go to a clean chart because I already marked this one up. I don't want to mess it up. USD SGD. So I'll just show you an example here. I'll mark it up on all the different time frames so you can see the difference. So right here, here. Actually, this is kind of hard to fix this. See, the problem with a lot of charts is once price gets to an area that's too far from where it's never tested before, you're not going to get zones down there. And that's kind of where price has moved lately, the past 2 weeks. So it's going to be kind of hard. The thing with when you're trading exotics too is that they don't move as smoothly. So if you compare SGD versus to JPY, they're a little different, or like GU. Actually, this is what I mentioned earlier. So, the past 2 weeks, price is pushed to an area where it hasn't really tested. So that's why there's no zones right here. In order to get these zoned areas, you'd have to go to a higher time frame, like the 8-hour or the daily. See, like the daily. So since price is right here, you could have just drawn zones from this area right here, just so that you can see areas of rejection where price currently is. So you go back to the 4-hour, and then you can see there that it looks a lot easier. So you can see that price is probably going to be ranging within this point. This price came from this zone to this zone, back down, and it's probably going to go back to this zone again before either breaking upwards or coming back down. So generally, I would chart on the higher time frames. I'd probably start on the 4-hour, and then you can move lower. So let me just turn on the SRs again. But it just really depends on how you want to trade. So if you're scalping, you're obviously not going to draw zones on the 4-hour because it's pretty much irrelevant. So I'd probably start on the 1-hour. So if you want to scalp, start on the 1-hour, and then just draw your zones on the chart. And then you can go lower if you want. So we'll go from the 1-hour to the 30-minute. There. And then you can turn off the SRs. And then you can see how it's lined up right there. See, the SRs help you a ton because instead of drawing those support resistance areas, you know exactly where the zones are without even looking at the chart. You just look at the SRs. Yeah, so if you want to scalp, you go on the 10-minute. You can see it's a lot clearer right here. You can see price goes from zone to zone. It moves exactly the same on any time frame. It just depends on where you draw your zones. If you want to scalp on the 5-minute, there you go right there. You can see the zones where price usually moves and rejects from. So price moved within the zone right here, came down, came up, rejected, consolidated a little bit, came down, went along this zone, came up, consolidated along this zone. And you can see that price moves in zone, it moves in waves. So it'll go from trending, consolidation, trending, consolidation, trending, downtrend, uptrend, downtrend, uptrend, downtrend. And then, it pretty much moves from side to side. So depending on which strategy you want to apply, you can mark up charts on any time frame, but I would recommend doing a top-down analysis. So going from like the 4-hour, like how we mark this up over here, to the 1-hour, 30-minute, and then even lower like the 10-minute if you're thinking about scalping. It just really depends on your style. But generally, the zones are going to be in the same area. So even though the zones were marked up here on the 1-hour, even though we went on the 1-hour down here, zones are still perfectly fine. You can see that they still line up. But yeah, let me go back to odd USD. So Angel had another question with, Randall said, for your K2 indicators, is there anything close to using the green red buy signal that we can use? Not that I know of. I created these indicators, so this is like my proprietary code. So they're based off momentum. A lot of people think they're based off moving averages, but they're not. So if I turn on, so let me go on the higher time frame. And then you can see here that these are the momentum indicators. And then if you want to turn on like moving averages, so I'll just show you an example just so you guys can see, because I know a lot of people are always trying to copy the K2 indicators, but then they end up losing a lot of trades because they think they're using the same indicator, but they're not. This is like my proprietary code that I coded myself, so it's not something that you can find anywhere else, because obviously I'm the only one that created it. Yeah, so a lot of people like to base it off moving averages. So you can see right here, there's a moving average that crossed right here. But the thing is, it's kind of late from the entry right here. So again, right here, there's a buy entry, the moving average crossed right here. Again, right here, price crossed over here, moving average. Right here, again, a buy. You could have waited for it to cross over here, but you'd be see, like if you try to enter this trade the same way as the K2 indicator, so if you enter this right here, you'd have like about 100 pips. But if you entered it right here, once this crossed, you'd miss out on like more than half of the pips. Again, right here, like they're different compared to like they look very similar, but they're totally different, because you can see right here as they cross, I mean, you can use this if you want to, if you want to use something that's kind of similar, but it's not really as accurate, because you can see right here, they don't match up when these cross over. So these cross over, but the signal's like way over here. And the thing with this too is you'll just see these crossovers, but you're not going to know if it's an invalid signal. Like right here, there's an invalid sell signal, but you're not going to know if it's invalid because the crossovers don't give you specific colors. You can see right here, there's a bunch of invalid signals, but there's nothing that, you know, obviously if I knew what was close to this, you know, well, actually, if you find something close to this, I would want to know, because I want to know like what could even match the momentum indicator. Because me personally, I'm always trying to upgrade the system. So if I find something to make the system better, you know, I would want to know so I can better the system. That's pretty much how I created these indicators. Like at first, all we had was a momentum indicator. After the momentum indicator, I created the trend meter. After the trend meter, I created the SR, where, you know, automatically plots support resistance on the chart for you. After that, I created the zones. Like I literally create these indicators on my own. So, you know, there's not really something that I can recommend that's anywhere near what I've created, because the thing with my indicators is, you know, I've been trading for a long time. So whenever I see something, and if I ever see something like on the chart that I need help with, like determining the direction of momentum, you know, it's hard for a normal person to determine how momentum moves. And that's why I created the momentum indicator. With the trend meter down here, you know, generally I would have like 4 charts open. I'd have like a 30-minute, 1 hour, 4 hour, and daily, just to see, you know, the direction of trend. Instead of having that, I created the trend meter down here, where you can set the time frames right here, like a 30-minute, 1 hour, 4 hour, or 2 hour, and the 4 hour. And then instead of having 4 charts open, I just look at the trend meter down here, and it helps me identify the trend. You know, on top of that, you know, I hated drawing support and resistance because it was always adjusting. So instead of having to draw, you know, support and resistance on the chart, like draw stuff like that, I created the K2sr indicator. So if you look here, the K2sr indicator is this red and this green line down here. So as price moves, you can see the SR moves with it. So instead of wasting your time drawing support and resistance on the chart, it automatically plots for you. And this is something I created on my own as well. Like all these indicators I created on my own. So, I mean, you could find a different support and resistance indicator, but I would say that mine is probably the most accurate, because I'm always adjusting these. So if there's something new that, you know, I spot in the market, I'll have my coder go and make adjustments so that I can make it better. And that's pretty much, you know, why our win rate's so high, because I'm always working on these indicators. I'm making something, well, I'm never making something different, but I'm making something better, like around the clock. Same with SR indicators. So this is the SR1. The SR2 is where it drew the zones. You know, I wanted to know where price was rejecting from. So pretty much, instead of drawing these zones on the chart for, like, you know, you do have to keep drawing the zones consistently. So instead of drawing these zones right here, I created the K2sr indicator that automatically plots the zones for me. So instead of me going around drawing support resistance back, like over and over again, it does it for me. I don't know what else is there. And the pivots indicator. So the pivots indicator, it goes hand in hand with, you know, all of the other indicators. So the thing is, if you can see what the current trend is, and I made this because of the current market conditions. So like whenever the market changes, I'm always creating new things to help, you know, K2 members get better at trading or be able to trade more efficiently. So instead of using the trend meter down here, This became a little ineffective because, with COVID and everything, it was hard to get an overall trend, because generally when you use this, it takes the trend off these 4 different time frames. So instead of doing this, I created the K2 pivots indicator, where you can see the trend on this specific time frame. So instead of looking on 4 different time frames, you can see, a clear trend off one time frame. Like the 4-hour right here, it's trending up. Go on the 10-minute, it's trending down, just by looking at the pivots. So yeah, I mean, that's basic explanation as to, the indicators. I don't think there's anything else that's like near any of my indicators, because I created them. So, I didn't base these off. I didn't like take someone else's indicators and then turn them into something. Like, these are all from my thought process, my trading experience, my knowledge. So if you do see anything that's similar, I mean, feel free to let me know, because, I'm always up for making, to making the indicators any better than they already are. But, just from our results, like just looking at our trade results for the year, I think they're pretty accurate as far as I'm concerned. So I'm going to delete these. Angel said, CT said, look at alert and cross over as confirmed for let's draw down. Yeah, exactly. You can do that too, CT. I know a lot of people have done that too. Like, the thing is, you don't have to just use the K2 indicators. Like, the K2 indicators make trading easier for you, but you can always add other indicators. Like the thing with Wade uses the K2 indicators, but he also uses moon phases. Like he like a lot of people incorporate them into their own strategies, because a lot of traders in K2, they're not brand new traders. We have a lot of experienced traders in K2 as well, who have their own strategies, and they use the K2 indicators to supplement their strategy. So although I give you guys a blueprint on how to be a successful trader trading K2, you can always use it to your advantage for your own strategy. There's no one way to trade. There's like a million ways to trade, and you can literally, the opportunities are endless. Literally, if you know how to create your own strategy, and you can incorporate the K2 indicators into your strategy to increase your probability of winning. Angel said, do we have access to those? Yeah, Angel. So I think I talked to you about the strategy, right? Or the option. So if you, sorry, let me pull this up right here. So if you sign up to the K2 strategy, you'll have access to the course. So let me just pull up the course real quick. I'm not sure if you signed up yet, Angel. I didn't see anything from you. So once you do sign up, you'll have access to it. But you have to make sure that you sign up to the actual strategy, not just the signals. Because a lot of people sign up to the signals only, and they think they have access to the strategy, but they're completely different. So yeah, when you have access to the K2 strategy, you'll have access to the course right here. Basic breakdown of everything. I'll explain how I draw trend lines, support resistance, stuff like that, the basics. And then the actual K2 strategies right here, like the intraday strategy, the momentum strategy, scalping strategies, support resistance indicator, the SR strategy. Pretty much everything that I explained today is explained here in detail. So if you ever want to learn how to trade exactly how I do, because these are the only strategies that I use, I don't use anything else. So if you look at all the signals that I send out, like all these signals here that I send out in the K2 Premium, these are all from using the K2sr zone trading strategy. It's only one strategy that I use for every single entry that I make, except for the US 30 entry signal. I'll show you guys how I do that later. But just looking at the results here, these are all from using the K2 strategies. Like, I don't use anything else. So these are the results for FX for the year. January we're up like 1,700 pips, February 500 pips, March 3,000 pips, April 1,400, May 1,400, June 2,400, July 1,400, and a total of 12,146 pips just Forex, using these strategies. So literally, if you can follow directions and trade exactly how I do, I mean, you can produce these own results on your own. Similar with the US 30 strategy over here. I'll show this a little later, once we get to it. But I did notice the time, it's 5:45, so we're about 15 minutes before the next candle closes. So I'm going to scan the charts shortly, before I continue with these questions. So let me just mark this off right here. Randall, I'm gonna show. I'll send the. I'll put the links right here. So here are the links. All right, Randall. So in the chat, I sent the links to sign up for the K2 strategy subscription. And we still have the trial going on right now. So if you want to look there, you can. If you want to just go on the website, you can too. It's just that, let me see if I can find it. So if you just go to our website, k2trades.com, it's real simple. It's just the, k2trades.com. And you scroll down to the bottom. We still have the trial going on, which is $50 for the first month. And then it just switches over to the, the original, the normal subscription. So we still have that available right now. So if you want to look at the link that I put in the chat, you can use that to sign up, or you can go on our website at k2trades.com and then sign up right there. But yeah, I'll go over the strategies right now because I know you asked about that. So I'll go over the strategies one by one. But first, let me just scan the charts to see if there's any entries for this 4-hour candle. Let's see. So like I mentioned earlier, I'm applying the K2sr zone strategy. And like I mentioned, like how price moves from zone to zone, I'm basically waiting for price to break above a zone, like right here. And then I take a buy. Again, right here, price broke below, broke above. Take a buy. Right here, price broke above here, broke below. Got a sell signal. Take a sell. And they all hit TP. So that's the strategy that I've been applying lately. It's an easy strategy to apply and super accurate. So there's nothing right here. Reason why there's nothing here is because price is within the zone. If price closes below the zone, then I would anticipate that to shoot downwards. But the only problem is that there's not enough space here. I like about a little over 20 pips. This is only 21 pips, so I'll have to cover the spread, which is 2.5. So I'm going to avoid this trade because, I only take trades that are worth taking. I don't really take super risky trades because I want to make a decent profit from it. So right here for odd JPY, why did I draw that zone right there? Okay, so the zone's right there from the SR. Like I mentioned earlier, pretty much the zone's about 20 pips. But yeah, like I mentioned earlier, I'd wait for this candle to close above here. So similar to what happened here. So this is the same situation. There's a buy signal, a buy signal. I'd wait for it to close above the zone because once it closes above the zone, I'm anticipating it to shoot up to the next zone for another retest. And it'll probably establish a double top right here. So this entry right here, as price broke above this zone, I think we took this trade, but I would have taken a buy right here. And then, obviously I would have locked in 57 pips, or I could have rode it to the next zone for like 100 pips. It just really depends on how much you're looking to risk, or, how much risk can you handle. So odd JPY, I'm not taking that because it hasn't broke above the zone. Odd NZD. This is a trade that we took earlier. We did hit TP1 already around here, and TP2 is right here. The reason why I put TP1 right here is because I was anticipating price to reject off the zone, and that's exactly what it did. So it came up, and then it didn't test the zone, but it did reject off it, or not off it, but around the area. So that's why we put TP1 there. I actually got stopped out of this position already. I just have it active in case, I'm still going to document if we hit TP2 because other people are still in this trade. So me personally, I don't have this active on my personal account, but technically it's still an active trade currently. This is the odd USD position. I would wait for this to close above. So if this closes above this zone right here, then similar to what I mentioned before, I try to catch it as it rides up. But it doesn't look like it's going to close above it within the next 10 minutes. So I'm just going to keep an eye on it. I have it marked right here, highlighted just in case. Joel's asking, can this Hey Joe, can can this US 30 method be used on the 1 hour chart as well? I don't know if that was a typo or because I don't think we've gone over US 30 yet, but this strategy that if you're talking about the strategy that I'm going over right now, this zone trading strategy, you can use this on any time frame. You know, preferably be better on the higher time frame because the zones are a lot stronger. But if you do go on like on the 1 hour, same situation right here. So we got a buy signal right here. As price closed above this K2sr zone right here, like right here, you can see price closed above it. You could have entered a buy right there, right? Because we're anticipating price to go from this zone to this zone, which what happened right here? It got close to that zone before rejecting. So if you took that trade on the 1 hour, you could have locked in some profits right there. Same with right here. Price, we had a red signal. Price closed below this zone right here. Right here, you take a sell. Could have locked in 20, 30 pips. Same situation right here. I mean, you could keep doing it like literally every time it breaks the zone. So it breaks the zone right here. We got a sell signal, broke the zone right here. Take a sell to this next zone. Again, right here, broke the zone. Take a sell right here, and so on. And then you can go on the 30-minute if you want to do that too. Same situation right here. We got a buy signal. You could have taken this buy to this next zone right here. There's 13 pips for you. Again, right here, we got a sell signal. Price was above here, closed below the zone. Enter another sell right here, another 13 pips. Again, right here, we got a buy signal, but it's pretty close to this zone right here, so I wouldn't have taken this trade. Right here, we got a sell signal. It closed below the zone right here. Take a short position right there, another 13 pips. Like you can literally do this all day. Again, right here, price broke below this zone. Or no, we got a sell signal, and then price broke below the zone right here. You take another sell. Well, like 25, 30 pips right there. Again, right here, a buy signal, right? We got a buy signal. Price closed above the zone right here. Another 30 pips or whatever. I mean, yeah, the strategy works on anything. You can use it on this. And this is an easy way for you to, you know, a lot of people always talk about identifying market structure, and people try to overcomplicate it. The real thing is if you have the K2sr indicator and you have these zones on the chart, you literally have the market structure drawn for you. So there's no guesswork, because the problem with a lot of traders is everyone identifies zones differently. So, you know, like this might be a zone for someone up here, you know, or this might be a zone. But who knows what's the right zone, because it's so subjective. Like the way that you look at the chart is totally different from how someone else looks at the chart. And that's why I let the K2sr indicator do take all the guesswork out. So I don't have to guess. I just turn on the indicator. And then there you go. I got the zones on the chart for me. And the thing is, this pulls back as much data as you want. So I already I have the settings set to 100 candles back. I could change this to 500 candles back. So if I want to go 500 candles back, I could do that, and then it'll update. Because like I mentioned, the past 2 weeks, you know, price down here. But if you were to trade somewhere where price was, you know, within the same area for a long time, or actually, I think the chart's just not loading. Yeah, I don't know if you guys can see that. It's just my internet connection is unstable. But yeah, so now my chart's updated, and you can set this to different points. So right here, I have it set to 400 or 500 4-hour candles back. I could change that to 900 candles back. Hit OK. And then you got to give it some time. Right here, it's loading. And then you can see that the pivots kind of changed. I mean, the SR zone has changed a little bit. But I'm going to put it back to 100 because, you know, I trade intraday, so I don't like to look that far back. And then you can see that they move slightly. But yeah, you know, pretty much this helps out take the guesswork out of the equation for you guys. So let me sorry guys, I didn't even look at the charts. I was supposed to look for the 6-hour candle close. So Let me just scan for those real quick, see if there's any entries. I'm just going to do it real quick. I'm not even going to talk about it. So let me just go through AJ. Nothing there. This trade's still active. AU, I would take this if price was to break above it. Hasn't broke yet. CAD CHF. This was an entry here. I don't know if I called this or if I missed it. Looks like I missed it, but there's our UJ, guys. So if you guys are following the premium, man, we're hitting TPs all day, guys. So right there, UJ TP1, 18 pips hit. So I'm going to call that right now after I look after these trades. But like I said, the zone strategy right here, if you took this, because we have a buy signal, price broke above the zone, took this buy right here, you would have locked in about 50 pips. Let's see, CAD JPY, nothing there, nothing there. This is actually an entry right here. I don't know if I'd call this, but yeah, technically this would be an entry right here. Your CAD. This is one that I gave yesterday. This was like it was just a trade idea. It wasn't an actual signal, but some people are in it. It's in profit, so it's looking good. EC, nothing there. EG, this actually could be nice. This is the same, entry that I just talked about. We had a buy signal right here. Price broke from below this zone, and then it closed up here. So I'm anticipating this to come up to this zone right here. Because like I mentioned, see price goes from this zone to this zone to this zone to this zone. It pretty much just bounces from zone to zone. So price came from this zone, odds are it's going to go up to this zone right here. But nothing there. This would be a late entry for EJ. Like I mentioned, I wait for price to close above it. And then if it does, odds are it's going to keep shooting up. Yen. My internet's running slow now. Let this load. All right, Yen. Nothing there. And like I mentioned, you don't have to use the pivots indicator, but I like to use it so I can see where the overall trend is. Because obviously I don't like to trade against the trend. EU is what I mentioned. So you guys, when it gets within these zones, price might break above it or reject off it. And that's why I have multiple TPs, because there's a certain TP area, like a TP1, TP2. Hey guys, is everyone still here? Let me sorry guys, I'm having like bad internet connection right now. Let me see. I think people are still here. Let me pull up the chat real quick. All right, cool. CT's still here. So it looks like everyone's still here. Sorry about that, guys. My internet connection just went out real quick, but it looks like it's back on. So yeah, let me keep scanning through this real quick. GA, nothing there. GC, nothing there. GCHF, nothing there. GJ. So this would be a valid sell entry, but like I mentioned, I don't like going against the trend. So the problem with this is I would wait for a buy signal, because technically I don't really like going against the trend, since I'm a trend trader. GN right here, yeah, it's gonna go against the trend too. GU. So this is the GU from earlier that I called. It's really close to TP1 for 25 pips or 23 pips, so that's cool. NZD CAD, it's too close to a zone. Like I mentioned before, price goes from zone to zone. So as you can see right here, we got a nice bullish candle and a rejection off this zone. So odds are it's probably going to reject up. Or if it doesn't, it'll continue down. Nothing there. This is the NZD CHF position I was talking about earlier. Me personally, it hasn't filled for me. You can see right here my alert's still active. NZD CHF filled, so it hasn't came down to this point. So my trade hasn't filled yet. I know some people in IC markets or people with wide spreads, they their positions got filled. So, you know, unfortunately, I mean, that sucks if you're in this trade, but I think it's going to come back down because the trend down is so heavy. NZD JPY, nothing there. This actually would be a nice trade, but you know, fuck it, I'm gonna call it trade, whatever. It looks risky, but I'm gonna call it anyways. We'll stop loss down here to about 52 pips. So this is pretty much using the same exact strategy that I just went over, the zone strategy. You know, that's been very accurate. It's been hitting TP. So since like the market's been really good and we've been hitting TP so often, I'm just gonna call it because it looks like a good trade. So let me yeah, for you guys that aren't in the premium, you guys will see how I send out these signals. It's real simple. Take a screenshot of my chart so that everyone can see what I see. Here. This is for 52 pips. And this is for NZD USD. Entry point is right there. Profit level 1 is right there, or full profit actually, 52 pips. So yeah, let's see, 52 divided by 2, 26. It's going to be TP2 right there. And then 13 right there for that. All right, so there goes that signal, guys. All right, and then lastly, I'm going to set my alert so I can see when we hit TP. So TP1's 13 pips. Since the buy limit, it hasn't filled yet, so I'm gonna put this there too, just so I know when it fills. It's probably gonna fill right now. It looks like it's coming down. Yeah, it just filled. That's cool. All right, so we got that. Stop loss right here. You know, I don't like putting stop losses, but I gotta know when it hits because you know people want to know sometimes. I mean, yeah, we don't celebrate losses, but there's some people in the group that want to know. So I'm just putting it there just in case. Someone, see, iPhone said, do you mainly send market executions? No. So I usually send specific entry points. I don't think I've ever sent a market execution. Well, I probably have like a long time ago, but generally I send like buy limits, sell stops, buy stops, you know, a specific order type. But in situations where your spread's too wide, because I know some of you guys like to use, you know, unregulated brokers. If your spread's too wide, then yeah, you can enter a market, but I never recommend it. Because you know you don't want to enter a trade at market and then your spread's super wide, and then if your spread's too wide, then you're gonna get caught. You're gonna enter the trade at a huge loss. So that's why I never recommend that. You know, if you happen to miss the trade, then I would just recommend that you wait for price to retrace or pull back, or you know, anything, because if it pulls back, odds are you can just re-enter at that specific price point. But generally, I don't really recommend. I don't recommend market executions unless you have a tight spread, which I know some of you do, but not everyone does. So that's why I never really recommend market execution, because I don't want someone, like, say if this was like a 7 pip spread, if you entered market execution right here, you'd be entering way up here, like 7 pips in the loss. So that wouldn't provide for proper risk management, because obviously you're going to be entering with the automatic 7 pip loss, and your stop loss and TP aren't going to match. So yeah, so for me, I almost never send market executions. Yeah, it's a buy limit. That's where I put in the signal right here. So I put valid K2 buy limit entry. If you have access to the indicators, they all, I mean, to the premium groups, there's I put the specific order type for each one. So this would be a buy limit. It would just depend on where price is. So if price is above it, it'll be a limit. If price is below it, it'll be a buy stop. So those are the two different order types. But generally it'll be, one or the other. All right, so let me keep going through here. All right, guys, if you guys have any other questions, feel free to put them in the Q&A. I still have a lot of questions here to go through, but I'm just reminding you guys, just in case you guys have any other questions. So I'm going to zoom through these questions right now because I know a lot of you guys have been waiting for a long time, so sorry about that. But I'm going to, I'm going to go through them real quick. So let's go to, so first, let's see, is Randall still here? Yeah, so Randall's still here. Randall, I'm going to go over all of the strategies real quick for you. First I'm going to go over the US 30 strategy since Jalen's asking for it, and that's one of the strategies, and it differs from all of the other strategies that we apply because that one's specific to US 30, and it's only taken once a day. So this is the daily US 30 strategy, and it is super simple. So let me go to. So basically, the way that this strategy is applied is. Daily US 30 strategy. Or I'll just put K2 daily since you guys know. I'm sure you guys are familiar with it. Well, most of you guys. So first, you're just gonna look for entries after the New York Stock Exchange open, which is 6:30 a.m. Pacific Daylight Savings Time. Next, identify the first valid K2 entry after New York Stock Exchange open. Lastly, you'll enter on open of following candle. For TP, stop loss 1500 pip minimum. And then I know a lot of people get confused with this, but like TP, I'll go over that later because that's going to be subjective. So, all right, so first we are going to, yeah, this trade is still active from today. So I'll just go over the one from today. We did hit TP2, but it's still active right now. So let me just mark it up for you guys. So I'll put a vertical line where the New York Stock Exchange opens. And the market's just been moving weird today. So I'm not sure if any of you guys are familiar with how the market's been moving, but it's just moving super unusual today. So first you're going to look for entries after the New York Stock Exchange open, which is going to be 6:30 a.m. my time, Pacific Daylight Savings Time. If you're on the East Coast, obviously you're going to be 3 hours ahead. You'll have to cater that to your specific time zone. But okay, so first you're gonna look for entries after 6:30 a.m. my time. So right here, 6:30 a.m. So after here, we're gonna be looking for entries right after this point. So the first valid K2 signal that appears after this is going to be our entry. So first requirement's met, we look for entries after 6:30. Next, you wanna identify the first valid K2 entry, or sorry about that, signal after the New York Stock Exchange open. So the reasoning behind this strategy is that we're waiting for the market to open, and then generally on market open, there's like some sort of manipulation. Price gets moved in a certain direction before price gets pushed in the proper direction. So generally what we're doing is we're waiting for the stock market to open, and then we want to catch the direction of momentum for the rest of the day, because generally once we have it, confirmation of the momentum of price, like right here, generally price moves in that direction for the rest of the day, but it doesn't always move that way. However, it moves like that most of the time. So first requirement's been met, we look for entries after 6:30. Next, we want to identify the first valid K2 signal after the New York Stock Exchange open. And the reason we're trading after the New York Stock Exchange open is because we're trading during the New York, obviously the New York Stock Exchange. So obviously we want to trade when momentum is high. and there's high volatility during that specific market. So we're going to identify the first valid K2 signal. Right here, we have a valid sell signal because it's a red sell signal with a red bearish candle. So after that, you can enter on the open of the following candle. Sorry. So once this candle closes, you enter a sell order right over here. And then, like I said right here, TP stop loss is a minimum of 1,500 pips. So having this set up right here, generally what I do is I like to have my stop loss, or I have my TP. I'm out of this trade. Technically it's still active, but I'm out of this trade personally because I've been moving. Like I always recommend that you adjust your risk, according to how price moves. So generally I'll put TP1 50% away from full TP. So full TP is 1,500. TP1 is going to be 750 pips. So just seeing this right here, I'm just going to put a line over here. Yeah, like a horizontal ray, like right there. So the reason why I do that is like how I mentioned previously. So basically whenever price reaches that specific price point, I move my stop loss to that point to eliminate my risk. So pretty much right here, this is where we started the trade. All right, so we started the trade right here. Obviously after 6:30, first valid K2 signal, we entered the trade right here. So once price reaches TP1 or TP2, whatever I set it to, lately I've been using 3 TPs, and that's because of how market's been moving. Market's just been moving really unusual and irregular. So the thing is, you have to adjust with the market. If the market's moving weird, you're going to have to be able to, adjust your risk a lot quicker and a lot more efficiently to avoid getting caught in any like random movements in the market. So, back to the strategy right here. Pretty much once price reaches TP1 right here, what I'm going to do is I'm going to move my stop loss to TP1 to eliminate my risk and then guarantee profits. So as you can see right here, price came down. So price came down right there. As price came down right here, I get an alert. Like I mentioned earlier, I have my alerts like right here. This is actually still here because the trade hasn't finished yet. But I had an alert right here. So once the alert hit that price was below this point, you can see right here that price dropped pretty heavily, like 100 pips below TP1. So once I got that alert, I moved my stop loss to TP1. So basically what I did was I eliminated my risk. I guaranteed profits right here. So, and you guys don't have to do this. I mean, if you guys want to trade exactly how I do and know, what I like, how I trade and how I'm consistently profitable long term, this is what I do. I always eliminate my risk and I always guarantee profits. So even though I'm taking smaller profits instead of the full entire move, I'm not taking any losses, or I'm taking very minimal losses. So these wins, these TP1s are going to add up over time. And generally, if you keep winning and you don't lose, your bankroll is just gonna keep stacking up. So if you've been trading long enough, you'll understand that risk management is more important than hitting these home runs every single time. So once price got to TP1 right here, I moved my stop loss to TP1. So as you can see right here, price swung up. As it swung up, I got stopped down in profit. And the good thing happened that I got stopped down in profit, because look what happened here. So if I leave the stop loss right there, and say you didn't adjust your risk and you're just letting it run because you just feel really comfortable with my trades, which a lot of people do, and I don't blame you guys, because if you could hit full TP, why not? But me personally, from my experience, I like to eliminate my risk, even though I know my trade's probably going to hit or not. So right here, this is why I'm glad that I moved my stop loss, because then I would have been screwed in this position right here, still holding my trade in the negative. So give or take, it just depends on your personality. If you want to take risks, then feel free, because the thing is, price might come down and still hit full TP. And I'll show you guys a prime example. So look at the trade yesterday, same requirements. So let's see, 6:30 yesterday on the 3rd. Right here we had a vertical line at 6:30, right? So 6:30 is right here. I'm going to rewind this to this point. So people held this trade for super long. I got out too. I got out at TP1. So basically look for entries after 6:30, right? 6:30 is right here. So this is 6:30. Here's the first signal. So after 6:30, look for the first valid K2 signal. Right here's the first valid K2 signal. In this situation, we enter on the open of the falling candle. We enter right here. Like I said right here, minimum TP stop loss, 1500. And then a lot of people just let this trade run. So if I let it run, way down here. So if you let this run, look what happens. If you held on to this trade for like literally the entire day, see if you're persistent and you trust it, like look at this. It came up here, it hit TP1 right here. So I already got out at this point. Or at this point, somewhere around here, I got out at one of these points. But I got out of the trade because it hit TP1, like I mentioned right here, right? Look what happened right here. People started freaking out because they're like, crap, I should have just got out of TP1, like Shawn said, but I'm still in this trade. So they hung on to it. It came down into the negative. So they pretty much threw away all these profits right here. Look at these profits, 1,300 pips. But look what happens next. There you go, full TP, guys. See, so if it just really depends on your personality. If you want to take on the risk, then so be it. Me personally, I like to trade smart and I like to trade with strategy. So generally what I do is I get out of this trade instead of letting it run. Yeah, I got out at 750 pips, that's fine. But if you wanted to hang on to it, it still would have hit full TP eventually. So that's pretty much how the strategy works. Yeah, exactly. iPhone said if it's blue, it's on you. Yeah, so if it's blue, if it's red, it's on you. But the thing is, it just really depends on you. Like for me personally, I don't mind taking half profit because see if I had half profit right here and then I got half profit today, that adds up to 1,500 pips. So I got 1,500 pips, no losses. I'm cool with that because the thing is this strategy hits so often that you're better off just like stacking up those wins. So like look, if I go here to the results, yeah, so indices results since May, we have 39 wins and 8 losses. And most of these losses were my fault. Like I made a mistake. Like I traded during news or I traded when Trump was speaking or, something dumb was happening. And I decided to take a trade because I was feeling too lucky because we were like on nonstop wins. So, or I just didn't move my stop loss and profit. And that's why I took a loss there. But, even if you did that, you still would have came up with, these are a ton of pips, guys. Like this is a lot of money to make since May, just trading US 30. And that's why US 30 has become my bread and butter. Like this is my favorite pair to trade. And if you look at Tego over here, all he did was copy my trades. So he copied my US 30 trades and then look where he ended up. These are all blues, literally. Just copying my US 30 trades. See his losses from GA right here and EJ, but all the US 30 trades are straight winners. So, it just really depends on you or whoever else is taking the trade. But yeah, this is a breakdown of this strategy. This strategy is really simple. If you just want to trade once a day, there's like literally no stress because you take this trade in the morning and then you just set alerts at TP1, or if you want to just let it run a full TP, you can do that too. But yeah, like I keep calling you iPhone because that's your name on here. But iPhone said, yeah, risk management is key, and that's what I always emphasize. Risk management. If you want to be a long-term trader, you just have to be able. If you want to be a long-term, consistently profitable trader, you just have to focus on risk management. Because the thing is, if you over leverage all the time or you over trade, odds are you're gonna get burned one day, like at some point. But yeah, iPhone said you don't trade US 30 during London. I personally don't because I'm located in the US. So, I kind of like to sleep sometimes. But if you're in the premium, Marcus trades the London. So if you go here, so let's see, I'm going to go to Marcus. Marcus actually calls because the thing is you can use this strategy on any it's called on any session. So Marcus right here, he calls the London trade. So right here, he unofficial K2s 30 London entry. He's using the same exact strategy, but instead of trading at 6:30, he trades at midnight because that's my time when the London market opens. So basically, you know, if you're trading at midnight, so I'm trying to find where midnight was. Yeah, so midnight was right here. You know, if you took the trade yesterday at midnight, you know, this strategy works on you could literally use this on any session. So this is midnight over here. We'll just rewind it there. Same thing. So instead of applying this strategy on you know, the US time frame or the New York Stock Exchange right here at midnight, same thing. So instead of 6:30, midnight. So midnight right there, you enter the first K2 signal right here. TP stop loss at 1500, I'm assuming. And then you let it run. And then it hits, see, does it hit TP? There you go, TP. Same thing. iPhone, I'm not sure what his success rate is, but I'm doing a study on that right here. So I'm not done with the back test yet, but this is the London session. Oh no, this is the US session. So this is US session. These are all the wins and losses. You know, obviously red's loss, green's win, blue's partial. This is when it hits TP1. And then this is when there's news. Obviously at the beginning of the year, there's a ton of news. So, you know, all these losses would have been avoided. Like we wouldn't have taken these trades because there was news during that time. And yeah, I've only gone up to March. I'm still working on April and, you know, the further months, but this is US session. There's a ton of wins right there. Here's London session. Same situation here. In January, there was a ton of news. So that's why we could have avoided all of these losses. But, you know, overall, it's highly green. There's a lot of wins here. I think, so if I'm sure I don't know if iPhone, if you're part of the premium group, but they talk about London session like every night. And, you know, London session at night is probably the most profitable because that's when the volatility is super high and you're able to catch momentum every single time. So as you can see right here, there's a ton of wins during London. I'm actually thinking about staying up during London and just being nocturnal. So pretty much trading London into US and then just sleeping during Asia session, which, you know, that might be the move if this keeps hitting, because just looking at the results here, they're super, like, they're really good. Because the thing is with Asia session, see, they're okay, but they're not that great. So for some weird reason, or yeah, so during January, there wasn't as much news during Asia session. That's why there's a lot of wins here. So you can see a lot of wins in January because there was less news. But if you're looking at the US session, there's news every single day. That's why those losses happen. Same with you know, London session. In January, there's all these losses because there was news during that time. But Asia session, you know, pretty much if you could just trade when there's no news. So right here, when it's blue, there's no news. So blue, these are winners. This was a loss. You know what happens. You can't avoid it. Right here, wins. Like literally so many wins here. But like I mentioned, this is Asia session. So volatility is extremely low during Asia session. So, you know, this strategy just might not be good during Asia session because it's based on momentum. So if there's no momentum, then, you know, it's going to be difficult for you to be profitable trading this during Asia session. But yeah, I mean, that's the basic US 30 strategy. Oh yeah, he said I love London and New York. Yeah, those are, well, London is definitely one of my favorites too. So I might end up switching to that because, you know, even right now during Asia session, the only reason I have these webinars during Asia sessions because there's nothing going on in the market and there's barely anything to take. So, you know, I'm gonna give that some thought. I'm probably gonna switch over to it at some point. Let's see. All right, so, oh shit, sorry, Mimi. So Mimi said, hey, Shawn, do the zones stay the same? Can you also please go over how to drop the zones? Yeah, so let me go over that real quick. So Mimi wants me to go over, I'll go back to your question, Randall. I know you want to see all the strategies, but I'll just go over this real quick so that I can just go over the basic questions for everyone. So it looks like, oh, that's perfect. So that's pretty much all the questions right here. So I'm pretty much done with all the major questions. So I'm just going to go over how I draw zones. I think I went over that earlier, but I'm going to go over it again for Mimi. Yeah, I think that's about it for the question. So I'll go over the zones for Mimi real quick, and then after that, I can go over the strategies for you, Randall, so you can see what I do. Okay, let me just delete all this stuff. All right, cool, Mimi. So generally, like I mentioned before, I like to mark up my zones on the 4 hour. You know, you're free to mark up the zones on any time frame, but I think the 4 hour is probably the most accurate. So let me just zoom out, turn on the K2sr indicator. Yeah, so pretty much right here, what I'll do here is I'll look at the K2sr zones and I'll draw rectangles over the zones like this. So that's drawn over that. Again, right here, I draw over this. Actually, let me go to another pair, like a normal pair, because US 30 is a little different. It's hard to gauge how big and how wide the zones are. So let me go to like something like GJ. All right, cool. So this is a little cleaner. Pretty much the way that I draw my zones is I'll have the K2sr open, and then I'll draw a rectangle over each zone like that. And then I'll measure to see how far each area is. I like to have at least like a 20 to 25 pip space, like some sort of gap in between the zones. Sometimes when it's like, generally if price is like this, it's too far away, you know, these lower zones are kind of irrelevant. So basically here, let me just go here. So when price is way up here, there's no point in drawing zones down here because price isn't going to go down here unless price reaches down. So if price goes down to like this point, then I'll draw some zones down here because then it becomes irrelevant. Right now it's kind of irrelevant. So I'm just going to draw this zone right here. And then, you know, possibly this zone right here, because the odds are price isn't going to reach, you know, this far. And then when it does, you can always draw more zones if you're interested in it. So that's pretty much it for right there. I can even draw another zone right here if you really want to see the lower zones, which is not super necessary. And then I'll just delete the K2sr, and then you zoom out, and then there's the zones right there. There's no real template that I save. Basically, I have it on autosave, so I click this right here, and then I turn on autosave. So basically, every 5 minutes, my charts are saved, and if I ever refresh the chart, so like right here, I'm on GJ. If I go to GC and I go back to GJ, it's still there because I have it on autosave. And then if it's not autosaved, I just click on this button right here, and then it'll save it. So I mean, that's pretty much how I draw these zones. Let me go to another. It's kind of hard to draw zones right now because, like I mentioned, price just shot way too far from where price currently was last week. So you can see right here, the zones are very far. Like right here, the zone's super far from current price. Okay, here. So I'll make it. This will make a lot more sense. So okay, so GJ, you can see right here, there's no zones right here. But what I'll do is I'll go on the higher time frame. So if there's no zone up here, because obviously if you want to take a trade, you're gonna have to know where the zones are. So you go to the 8 hour, you can see the next zone is right here. I generally go on the higher time frame. If it's not on the higher time frame, then I'll go on the lower, but it's more important to go on the higher and then go from a top-down analysis. So as you can see right here, no zones on the daily, weekly. Yeah, basically no zones there either because price is way up here. So this will give you a good, because generally all you need to really know is where the upper zone is and where the lower zone is. Because like I mentioned before, price goes from zone to zone. So price came from down here to up here, from up here to down here. So as you can see, price rejected off this area. Price is likely to come down to this zone over here before, either bouncing back up or continuing downwards. So this is pretty much how I draw my zones. And then once I have those drawn up, I'll just close my SR indicator so it doesn't make them, it cleans it up a bit. And then there you go, I have my zones right there. And then I just click this save button right here. And then if I close my window, it'll still be there when I reopen it. GJ, I wouldn't say it's necessarily dropping. It's, you know, it's kind of going sideways right now. Let me see if there's a sell signal. Yeah, so we actually got a sell signal here. So technically it is dropping. I just don't know how, you know, how far it's going to drop or if it's going to retrace back up. Because if you look at the pivots, it's still trending up pretty heavily. So it just really depends on how price reacts where it currently is. It's actually in a pretty crucial spot right now because it's coming down to test this pivot and then it can reject off it or it can continue down or, you know, whichever. But there's no specific direction right now because obviously I don't trade against the trend, so I wouldn't take a sell, even though we got a sell signal right there. Let's see. iPhone's asking what makes more money, Forex or stock trading? It's really up to you. I mean, if you could, you know, I recommend trading whatever you're good at. I used to trade stocks. That's where I started trading like 10 years ago, and then I moved to Forex because I got a normal job, and then I had to trade. You know, I couldn't trade during normal hours. But then I quit my job this year, and I just trade full time now. So I could literally trade whatever I want. But I'm already stuck with. I'm not stuck with it, but I'm already acquainted with Forex and indices, so that's what I trade. Um, I don't really trade stocks anymore. The reason why I stopped trading stocks because I hated searching for stocks. It's hard to find a good stock if you don't have enough money to trade the blue chips. Like, you know, finding a penny stock is like a needle in the haystack, honestly. And I wouldn't really recommend following like any stock calls unless it's someone that you really know, like knows what they're doing. So yeah, I mean, you can make a lot of money doing both. And the thing is with this indicator, it works for everything. Like if you want to trade, I don't know, what do you want to trade? Amazon or what, Apple? So if you type in Apple, you know, the strategy works on stocks too. So you can see right here, this is Apple. You can literally buy all of these pivot entries and you could make a ton of money trading K2 on stocks. You could trade K2 on anything. If there's momentum and volatility in the market, you can trade it. Like literally, you can just take all these buy signals if you're using the pivot strategy. Um, you know, that's Apple. I don't know what else people trade. Amazon. You know, same thing. You take all these buys. I don't know if you guys have a specific stock that you guys like to look at, but you can literally trade anything with K2. Like you can trade stocks, you can trade gold. You know, there you go, gold for another buy signal. You can trade indices. You know, there you go with another buy signal. I mean, the sky's the limit. Trade oil. I mean, what else do you want to trade? You could trade literally anything with K2. And there you go, hits TP right there. You want to trade crypto, XRP. I mean, the sky's the limit, bro. Like anything you want to trade, you can use K2. There's really nothing stopping you from being a profitable trader using K2. You can literally trade anything. But yeah, okay. So let me keep going down the questions. Spencer is asking, have you back tested London calls for SPX? I haven't tested anything for SPX yet. I still haven't even finished US 30. Like I've just been too busy, so I haven't been able to back test it. And the thing is, you know, all of our trades are hitting right now, so I don't really have free time. I'm more focused on because I know the strategies work. So there's literally no reason for me to go and back test. And I don't trade S&P, so that's why I don't even back test. I have no incentive to back test it, aside from giving advice. But you know, if it doesn't benefit me, there's no real reason for me to go back. Like Spencer, you have the indicators, right? You can back test it yourself too if you want. But me personally, I you know, if it had a benefit to me with my real trading, then I would back test it. But I just don't trade S&P, so there's no point for me to back test it right now. You know, when I get to it, I'll get to it. But just currently, I just don't have time for it right now. But yeah, thoughts on gold. We discussed gold earlier, so pretty much gold is super overextended. So me personally, I wouldn't take the trade right now because it's due for a retracement. So if you look back at gold, the last time it had a rally, So it rallied up right here. It had a huge drop, like a huge drop. It dropped from right here, and then it dropped all the way. It dropped like 900 pips, almost 1,000 pips. So that's the reason why I wouldn't trade gold right now. Because, like, for one, because it's too risky, and for two, you know, I just don't really I just don't trade anymore because I'm more focused on US 30. But me personally, I just wouldn't recommend trading it because it could come down and test these pivots before it like, I think it's going to continue up. Obviously it's going to continue up because sorry, I'm reading your message, Spencer. So Spencer said, it seems like it's going up US 30 so well. I was wondering how often they go. I don't think they're correlate because gold is different. So gold will be correlated with the dollar. So generally, if you look at the dollar index, so the dollar index is DXY. See, when the dollar is going down, oh, sorry, it's trying to get it on the chart, but it's not. Okay, so let me take this pivots off. So it correlates with the dollar. I don't think US 30, because US 30 is a yeah, no, because US 30 and S&P are stocks. They're not, you know, they're not correlated with gold. Gold's based off dollar. So if the dollar is weak, gold will go up. If gold goes up, the dollar goes down. The stock market's a little different. You know, it's only moving in the same direction because the dollar is super weak. But there's no, I don't think there's a direct correlation. I'm not sure if that's something you learned somewhere else, but I don't think there's. Here, let me go check. I actually have a bookmark for that. FX correlation. So let's see, I have this thing on my FX book. So let's look at US 30, or let's just look at gold. So gold is, say, UUSD. Where's USD at? Okay, right here. So yeah, it doesn't really correlate with US 30. I mean, it might look like it does, but I don't think it. Oh, okay, sorry, Spencer. Yeah, you like threw me off because you were asking about gold over here, and then you were talking about, you asked about London calls for S&P and thoughts on gold. I see. Yeah, no. So S&P and US 30, they generally move in the same direction, but the thing is that they're totally different assets. The US 30 has it only has 30 of the specific stocks in that index, while S&P has 500 stocks. Like, do you see the big difference between them two? Let me just put them side by side. Generally, they do move very similarly, but not all the time. And that's why when people ask me, you know, when I send a US 30 signal and they ask for the US 30 entry, I tell them I don't know, because the thing is, I don't want to tell them to enter the same trade, and then it goes in the opposite direction. So like looking right here, let me show you. Let's take these off. Yeah, and the reason why I don't trade S&P is because there's no point in trading S&P if you're trading US 30 because it's worth more, you know? So if like you're like S&P is like US 30's little brother. So that's why I don't trade both of them, because, you know, if you're good at one, you might as well just be good at the one that's worth a lot more. So you can see right here, this is US 30. You can see how it goes up right here, and then it comes back down pretty heavily, and then it pushes back up, and it comes down and pushes back up and it goes sideways. The thing with S&P right here is it goes straight up, comes down, straight up, and it doesn't move exactly the same. So right here, it has, you know, like a staircase moving up. So let me just, I'll mark it up right here. See, like the thing is, I wouldn't base S&P off correlations. Like, you should just master S&P or just master US 30. There's no reason for you to correlate these two. But yeah, see, look at this right here. These, see how US 30 came down pretty heavy right here? And you can see right here that S&P moves smoothly up. and this is why I don't like I never give this I never give twin calls, because they don't move the same. Like they look like they move the same, and they generally do move the same, because they're both, you know, the US 30 has the top 30 US stocks, the S&P has, you know, the top 500 US stocks, and those are a big difference. Like 500 stocks versus 30 stocks, that those are a huge discrepancy between them two. But if you like to trade US S&P, then yeah, you can trade it and you can back test it. But you know, just looking at it from right here, although they move kind of similar, you can see that S&P moves a lot smoother because there's more stocks, so they don't have, you know, as many jerky movements right here. So you can see S&P moves it pretty smooth. Right here, US 30 shoots up, shoots down, shoots up, shoots down. It jerks around more because it's only 30 stocks compared to 500 stocks. And this is why, you know, if you want to master one, just master one of them. You don't have to trade both. But yeah, I mean, that's pretty much it for that. You know, I'm probably never going to trade you at S&P because I'm already stuck on US 30. So I'm probably not going to go back with that. Spencer said, thank you. The greedy in me wanted to do both, but you're right. I'll say, yeah, because the thing is, if you can afford to trade US 30, there's literally no point in you trading S&P because it's worth less. So you have to get more pips on S&P to, you know, match your profit on US 30. And the thing is, US 30 is a lot more volatile. So, you know, generally, if you can't handle the risk on US 30, that's why people trade S&P, because it's worth less and it moves a little slower. But if you know how to trade US 30, you might as well just be a master at US 30, because you can just double up your position on US 30 then, you know, putting them side by side. So instead of putting like a standard lot on US 30, you'd put like a half lot on US 30 and S&P. But yeah, I mean, it's a learning experience. If you want to keep playing with both, I mean, feel free. But me personally, I only recommend focusing on one. Sorry, Randall. I've been like going through all these questions. I was supposed to go over all the strategies with Randall. So let me just go through the strategies real quick before I continue. So Randall, the first strategy here is going to be the K2 Trades official intraday strategy. So this is going to be the original strategy that we've been, that, you know, I taught initially. And then I just pretty much made a couple different variations as to how the strategy is applied, you know, with regard to different entry points. But I'll show you the strategy first. This is probably the easiest one. So generally, since this is the intraday strategy, it's traded on the 30-minute chart. And then we use the momentum indicator plus the trend meter. So as you can see right here, whenever price matches, so if we get a red and red like we did right here, let me just rewind this over here. So I'll just put the text right here. This is the K2 intraday strategy. K2 intraday strategy. So one, confirm K2, valid K2 buy signal. Trend meter matches signal. Re-enter on open of following candle. So as you can see from the other strategies, it's pretty much the same thing. Like the catalyst is going to be the momentum signal. This is going to tell you whether you enter a trade or not. And then for this strategy, you just want to make sure that it matches the trend meter. So if you remember what I mentioned earlier, the trend meter basically gives you the overall trend on 4 different time frames. So right here, I have it set to the 30-minute, 1 hour, and 2 hour, and 4 hour. So this pretty much gives you, you know, the intraday trend, because you want to see what the trend is for the current chart, and then you want to see how price is going to move for the next 1 to 4 hours, so that you know exactly, you know, how price is going to move and that it's moving in the direction that you want it to. So right here, we confirmed a valid K2 buy signal, K2 signal. So right there, we confirmed a valid signal because it's a sell signal with a red candle. So this is a valid sell signal. Next, you want to make sure that the trend meter matches the signal. So if it's red and red, you can enter this sell right here. And then you can enter on the open of the falling candle. So right here, I'm going to enter a short position. I'm going to put the stop loss at the previous swing, which is somewhere around here, about 1,500 pips. I'll just round it. And then that's about it. I mean, you can set your exit strategy however you like. You know, like I mentioned before, sometimes you can, you know, put your stop loss at the halfway mark. I mean, you can put like a marker at the halfway mark to move your stop loss. It's really up to you how you want to apply it depending on your risk tolerance, but it's not required. So if we let this run, you can see right there, it hit TP pretty quickly. So it hit TP within 30 minutes. So in 30 minutes or an hour, you would have hit 1,500 pips. And it's as easy as that. This is probably the easiest strategy that you can apply. The reason why I don't use it as much is because, you know, I like to trade on the higher time frames, and it's a little bit harder to find overall trends now. So let me see over here. Or I'll go to where price currently is right now. All right, so right here, same situation. Or let's go to a previous one because we're not going to be able to run through it since it's so far off. All right, so right here. Let me replay it. This is the most recent one. Reason why I'm not going to this one is because this is not a valid signal right here. It's a red bearish candle with a green buy signal. So right here would be a valid K2 signal, and it's valid because it's a buy signal with a green bullish candle. Next requirement, make sure that the trend meter matches the signal. Right here, it's green and green, right? Simple as that. Once you have that right there, you can enter a buy right here. Put your stop loss at the previous swing, which would be somewhere around here. We just round that to 1,000 pips. And then you let it run. And there you go, profit target again. You know, it's as easy as that. It's super simple. All right, we have one more right here. So I'll just rewind this again right here. And you can literally back test this to see for yourself how accurate it is. Like it's literally super easy. So right here, same situation, valid buy signal, trend meter matches, green, green, enter buy right here. You put the stop loss at the previous swing. Generally, this is what I don't like because it's a little subjective. So me personally, I wouldn't consider this the swing. And the reason for that is because this is such a manipulated candle right here. You can see that it came down and then it shot right back up. So I would consider this the actual swing since, you know, it's a smoother swing. So you can see right here, price swings down, swings up, swings down. This is the swing, right? Swings up again right here, swings down. This is a swing, swings up, swings down, swing. I don't consider this a swing because it's such a huge wick right here. You can tell that this was a manipulated move or something happened. There's news or something. It's a 700 pip move. So I would put my stop loss right here, about 800 pips. So I'll just round that to like 900. Let this run. And this is where it would come in handy. So you can see right here, if you let it run to full TP, you might hit stop loss. But like I mentioned, if you have your TP1 right here halfway, as price reaches that point, you can move your stop loss to that point. And the thing is, these are each 30-minute candles. So this is a 30-minute candle, this is a 30-minute candle, and these two are as well. So you had about, if you took this trade, you'd have 2 hours to exit this trade. Because once price reached this point, you get an alert like, oh, okay, time to move your stop loss. You can either move your stop loss to break even or to TP1 right here. I would just move it to TP1 or I would just exit manually once it was in this area right here so that I can guarantee myself 500 pips. You know, it doesn't hurt to lock in your profits and eliminate your risk. So that's going to be the original intraday strategy. That's the first one. Real simple. Next one is going to be, go back to the strategies over here. So that's the first one right here, the official intraday strategy. And you can apply this on pretty much any time frame. But since it's an intraday strategy, I apply it on the 30-minute. But you can also apply this on, you know, the 1 hour. See again right here, same thing. Buy signal, it's green down here, green and green, enter a buy. You would have won 2,000 pips right there. Is there another one here? Okay, again right here. Green and green, enter a buy. Locked in about 3,000 pips right there. Again right here, enter a buy. Stop loss to be right here, the previous swing for about 1,800 pips. And then there you go. See, these are all full TPs. Full TP for 3,000 pips, full TP for 800 pips. This is not a valid buy signal, so you'd ignore that. Another valid buy signal right here, another 2,300 pips. Super simple. And then, I mean, if you want to trade on the 4 hour, you probably have to change the trend meter for this one because it's on such a high time frame. But you can see right here that it still hits. So right here is an invalid sell signal, so we ignore that. Right here's a valid buy signal. So you could have entered a buy right here. And then you lock in like 6,000 pips right there. And it works on all time frames. So this is the first fake out. Yeah, iPhone said something about a fake out. I'm not sure which one he was talking about. But I mean, yeah, there's going to be fake outs. So this is going to be like, you know, their bare basic strategy. You can also incorporate the K2srs so that you can see where the zones are. And this will help as well. So like in this situation, you know, over here, you'd probably enter a buy, but then you would put your TP at some point like over here, or TP1 right here, because you would see that there's a zone there. So once price reaches the zone, you can, you know, move your stop loss and profit. So if it comes back, you get stopped out in profit, and then you guarantee risk. I mean, you guarantee the elimination of risk. But there's a ton of ways to apply, you know, these strategies. There's not just one way, but you know, this is probably the most easy strategy to apply. You know, again, we'll go to the strategies right here. The next strategy is going to be the momentum pullback strategy. It's pretty much the same exact strategy, except you're going to enter on the opposite candle. So this is going to be the K2. This is going to be the K2 momentum pullback strategy. Same exact requirements. Confirm a valid K2 signal. Make sure, but the difference between this is for requirement number 2, the trend meter does not match signal. So for this right here, same situation. So we're gonna confirm a valid K2 signal. Right here we have a valid sell signal, right? Because it's a red sell signal with a red bearish candle. And then next you want to confirm that the trend meter does not match. So right here the trend meter is green, but the K2 signal is a red sell signal. So right here, obviously they don't match. So in this situation, you'd enter on the high of signal candle. All right, sorry guys. So those are the requirements. You know, it's pretty much the same thing. It's just very small changes. So confirm a valid K2 signal. Right here, we have a valid sell signal. And then again, right here, we have make sure that the trend meter does not match the signal. So obviously if it's a red sell signal, trend meter has to be the opposite color, red, green. Since it's a red sell signal, we matched it with the opposite trend meter. Next, you enter on the high of a signal candle. So in this situation, you'd enter a long position right here because you want to trade in the direction of the trend. So right here, you enter a buy position at the high of that candle. So the thing with this trade here is this is the setup, and it's called the momentum pullback strategy because the thing is, you know, if price is trending, you want to trade in the direction of the trend. So if price is trending green and you get a pullback candle like this right here, what you're anticipating is that price is going to swing back up and correct to the overall trend and fill your order. So right now our order hasn't been filled, but as price comes up right there, it's finally filled, and then you can see it shoot up. So at this point, you know, odds are it's probably going to shoot up and hit our TP. Or if you move your stop loss and profit after it reached like 50% profit or 25% profit right here, you can move your stop loss to, you know, break even or somewhere in profit. But let me look for another entry over here. So this would be an entry right here too, but price never came back down, so it would have never filled. But okay, here's a perfect example right here. This is a great example. Okay. So right here, confirm a valid K2 signal. Right here, we have a valid buy signal, right? Next, you confirm that the trend meter does not match. Trend meter is red, so obviously we're in a downtrend. After that, you enter on it's either the high or the low. So if you're entering a buy, obviously the high. If you're entering a sell, it'd be on the low. So right here, we're gonna enter a sell position on the low of this candle right here. So right now we're not filled in the trade, but as price comes down and triggers our order, it literally hit our order and then went straight to TP. And this is another strategy. It's the same exact strategy, just different entry points. And this is how simple, the K2 strategies are. I made them simple on purpose so that literally anyone can go and learn it. Here's another entry right here. This will be the last one, and then we can move on to the next one. So again, right here, valid sell signal, trend meter doesn't match. You can enter a buy on the high of the signal candle right there. You enter that, and then it would have filled, hit TP, and they all hit. It's as easy as that. All right, so let me go to the next strategy. All right, guys, next strategy is going to be the scalping strategy. So I'll go over the pivots one because that's the easiest one. If you want to go over these two, you guys can also go over these, but I'm not going to recommend those anymore because the pivot one it's pretty much the same strategy, but it's a lot easier for someone to learn. The problem with these strategies is a lot of people got confused with them, so I'm not going to recommend them anymore. They're still available if you want to learn, but I recommend you just stick to the pivot strategy because it's super simple. So like I mentioned earlier, we already went over this strategy, but we can go over it again. This works on all time frames. So K2 pivot strategy, all time frames. So for the pivot strategy, we're going to be using the K2 pivots and the K2 momentum indicator. So first, identify trend K2 pivots. Identify pullback retracement. Identify rejection off K2 pivot zone area. Last, identify valid K2 signal. And then lastly, enter on open of following candle. And this strategy works on all time frames. So let's start with the higher time frames first, just to get started. All right, so right here. All right, so first we want to identify a strong trend. Okay, so let's go over here. Replay from right here. So first, we're going to identify the trend. In order to do that, you want to make sure that price is above all four pivots. Right here, price is above pivots. You want to make sure that the pivots are angling upwards in the same direction. They're all angling up. And you want to make sure that the pivots are kind of spread out like they are right here. So you can see right here, they're spread out. It's trending up pretty nice. Again, right here, they're still pretty spread out. Right here, they're spread out downwards, trending down, spread out upwards, trending up. Again, right here, trending up. So we've identified the trend. It's in an uptrend. You want to identify a pullback retracement. So you can see your price came up, established a high right here, and then it retraced down. So right here, it traced down. This is the retracement. So we fulfilled requirement number 1, requirement number 2. Requirement number 3 requires that you identify a rejection off a K2 pivot, off like basically the K2 pivot zone area. So any rejection within this area, within the pivots, would satisfy that requirement. So right here, price came up, retraced and pulled back down here, established a low right here, and there was a rejection off the K2 pivot area. So the first 3 requirements have been met. Lastly, you want to confirm a valid K2 signal. So right here we have a valid buy signal. So pretty much all 4 requirements have been met. Lastly, you're going to enter on the open of the following candle. So right here, you enter this on the open of this candle. Put your stop loss at, I mean, you can put your stop loss anywhere, but you know, like I like to mention, I put it at the previous swing. So it'd be somewhere around here, like 3,000 pips or 3,100 pips, somewhere around there. And then you let it run. And then hit TP right there. So as you can see right there, full TP for like 3,000 pips. Let's see. Anonymous attendee said, on my trading view, I don't have the choice to click on invite only scripts. What do I do to get the indicators? So for the anonymous attendee, you have to sign up for a subscription to K2. So if I'm pretty sure you're not subscribed, because you know if you were, you'd have access to it. But you can go to the website. Let's go to K2trades.com, and then you can gain access by scrolling down. Scroll down. We have a $50 trial right now, so you can go down, click on this trial, and then you'll have access to the indicators and the strategies. So that's how you'll get access to the you signed up. Anonymous attendee. Did you send over your, here, let me see. Did you email your username to my email? Because generally there's instructions how to get the indicators. I'm not sure if you because I'm not sure who you are. It says it's anonymous attendee. I don't see it's Shawn at K2trades.com. I'm not sure who you are, so I can't really confirm who you are, but oh, Kwame. Yeah, Kwame. So let me see. Oh, Kwame, I looked at your it looks like you only subscribe to the signals. You didn't subscribe to the strategy. You can see right here, Kwame, you only purchase the signals. So you'd have to have a subscription to the strategy in order to have access to the indicators. Because if you look over here, so let's see, you subscribe to the signals. See that they're 2 different ones. And if you look right here, so you subscribe to this right here. You can see right here for the signals, all you get is access to the premium channels. If you want access to the strategies, it'd be a totally different subscription. But if you want to upgrade to the strategy, just send me a message on Telegram, Kwame, and then I'll have you I'll send over your stuff. Because we can just switch it over because it's the same price. Like if you paid $50 for the signals, you know, it's the same price for the trial for the strategies. So just message me, and then you know, we'll switch over your subscription. Because I can just refund you for your previous one, and then you can just re-sign up for the strategy one. I know, sorry, it's a common issue where like a lot of people get confused with that. But that'd probably be the easiest way to get access to it. Yeah, no problem, bro. I'll here. This is what you do. Just go to I'll put it right here in the chat. So I'll put the link for the strategy, and then just sign up for the strategy. And then once you do, I'm gonna send an email to the support team so that they can refund you for your signals. So there's the, if you look in the chat, I put the link for the strategies right there. And then once you sign up, I can get you the access to the indicators. The only problem with, like, I can't give you the access without a subscription to the indicators because it's done in the system. It's all automatic. So I can't even just give you it manually if I wanted to. But yeah, okay, so let me just keep going over this real quick. So pretty much this is the pivots strategy. And this strategy can be used on all time frames as well. So this is the 4-hour time frame right here. Let's move down to the 1 hour. Same thing right here. So as you can see right here, price is trending up. There's a pullback right here, and then rejection down this area. Well, this is kind of risky because it pulled back like super far. So let's go over here to this area. Okay, so this is a little nicer. So we identify the trend. Let me just replay this right here. All right, so identify the trend. Like I mentioned earlier, price is above the pivots. Pivots are angling up pretty nice right here, and they're spread out. So it's trending up. Identify a retracement. So price came down, came up, pulled back right here to this area. Identify a rejection off the K2 pivot zone. So there's a rejection down here. And then we got a buy signal right here. So enter a buy right there. Let it run. And there you go, TP for like 2,500 pips. That's on the 1 hour. You can go down 30-minute, same thing. You know, it's the same exact entry actually. So right here, still trending up, pullback, rejection, buy signal. Once you get that buy signal, enter on the falling candle. Again, another one for 3,000 pips. On the lower time frames, if you want to scalp, same thing right here. Identify the trend, price is trending up. Identify a pullback retracement. So price came up, retraced right here, rejected off the K2 pivots, buy signal. All requirements met, enter on the falling candle right there. There you go for like 2,000 pips. And it works on all time frames. So this is probably the best strategy that I recommend using right now, especially if you're brand new, because it's really simple. The intraday strategy still works well, but it's hard to find an overall trend with how the market's been moving. So that's the pivot strategy. What else do we have here? And then we just have one last strategy. One last strategy is the zone trading strategy. And that's what I was discussing earlier. So I went over that a couple times, which is super simple. But I'll go over it again just for you guys so you guys can see what it is. K2 pivots, SR zone trading strategy. So first identify momentum, the K2 momentum indicator. Identify direction of momentum. Number 2, identify break and close past K2 SR zone. And lastly, enter open following candle. So like I mentioned before, this strategy uses the K2SRs. So I'll just hide this. K2SRs and the momentum indicator, like with every other strategy. So basically, there's a zone right here. There is a zone right here. There's a zone right here. I mean, these are just sloppy zones, guys. Like, obviously, your zones are going to look a lot nicer than this, but this is just for demonstrational purposes. All right, so let me just take off these SRs so it's a lot nicer and easier to see. Okay, so like I mentioned over here, identify the direction of momentum by looking at the K2 momentum indicator. So if you get a buy signal, obviously momentum swinging up. You get a sell signal, momentum swinging down. Right here, we got a buy signal. So we identified the direction of momentum. So price was, let me just rewind it over here. Right here, momentum is swinging up. Next, you want to identify a break and close past the K2SR zone. So right here, price came down, and then it broke above right here. So right here would be your entry. You enter right here, and then obviously hit TP. So hit TP for about like 1,000 pips. Again, right here. So in this situation, we still have a buy momentum because the signal was down here. We have a buy momentum, and then you just wait for another break and close past the K2SR zone. So price broke above this zone right here. So this would be another entry. So if you want to enter a long position right there, you enter right there, and then you let it run, and then it hits TP again. So right there, you'd hit 1,000 pips, another 1,400 pips. And that's pretty much it. This strategy, I recommend you use it on the 4-hour because the zones are a lot more accurate. But you could use this on literally this is actually 10 minutes. So this just goes to show that you can use this on literally any time frame. There's not just one time frame you use it on. That's a 10-minute. If you go to the 4-hour over here, it's probably a lot more accurate here as well. I mean, there's no specific accuracy. Like literally it works on any time frame. So if I turn on the K2sr indicator, Yeah, again, right here, you can, draw these zones. All right, cool. So take that off. And then, yeah, pretty much right here, same situation, identify direction of momentum. We got a buy signal, wait for a break and close past the K2srs. Right here's a break and close. There you go for like 6,000 pips on US 30. Again, right here, a buy, but it's in a zone, so you wouldn't take that. Again, right here, price broke below. We got a buy signal, momentum swinging upwards. It broke above the K2sr. Enter a buy right there. And then you'd put the stop loss at the previous swing, which would probably be somewhere over here, for about like 3,700 pips. And there you go for another win. I mean, like, this strategy can be used on literally any time frame, but I recommend use it on the 4-hour. Probably not on US 30 because you need a lot of capital to trade this for these type of movements, but it works on every asset. I was just showing this for an example. Kwame, let me so if you go on Telegram, I'm sure you're in one of the here, I'm just gonna message you. So let me look you up real quick. Kwame. I don't know if this is you. Is this you, Kwame? It might not be Kwame Hassan. Probably not. I think you're in the premium. So let me message you over here. Oh, no, you're not. Are you on Telegram, Kwame? My username is just K2 Trades. Oh, that is you. Okay, cool. So let me I'll message you right now. All right, cool. So you should have gotten that message. But yeah, so Randall, I don't know if you have any other questions, but that pretty much covers all of the K2 strategies. As you can see, they're all really similar. They're all pretty much the same type of analysis because they're all based on momentum and the trend, but they're just different entry points. So sometimes you'll see entries using the zone strategy, and then you'll see it's the same exact entry if you're using the intraday strategy. So right here's the intraday entry, right? Because we have green and green. So that would be a buy. But this would be the same exact strategy if you're using the zone strategy because price pulled below, closed above, same exact entry. And there's just, there's just a ton of different ways to apply the strategy. But yeah, so if you guys have any other questions, we're pretty much done with the webinar. We went over a little bit, but it's fine. I don't mind, spending more time on the webinar if it helps you guys, because I'm here to help you guys. It's, this is what I like to do. This is my passion. I love trading. So if you guys have any other questions, or if you guys want me to cover anything else, feel free to put them in the Q&A right now. Otherwise, I'll be on this again next Thursday. I do this every Tuesday and Thursday at 5 p.m. Pacific Daylight Savings Time. So every Tuesday and Thursday, I'm available. Also, I'm always available on Telegram. So if you guys have any specific questions or you want me to analyze anything, just feel free to message me on Telegram, and then I can help you guys out with whatever you guys need help with. Otherwise, that's it for the questions. This was a pretty good live trading room. I haven't really gone in this depth in a long time because a lot of people just want me to analyze, specific charts. But I hope this helped you guys. But yeah, if you guys have any questions, feel free to reach out. This will be on YouTube shortly. So looks like that's about it, guys. I'll talk to you guys on Telegram. And if anything, I'll catch you guys back here next Thursday. All right, guys. See you guys later.